Scott, hello, Jamie.
Hey, Steve, how's it going? Welcome back from the holidays, everybody. I hope everybody had a decent holiday period there and came back refreshed and
Yeah, I'm fasting.
Yeah.
I'm fasting today.
For the next week, I'm only going to be drinking water, just so everybody knows.
Mm-hmm.
Yeah. So, a little gluttony never hurt anybody. But welcome back. Today is November 27th. And wow, November is almost in the history books. It's going to be 2018 pretty soon. Time flies. All right, so thanks for taking the time to pop in and hear what we have to say today, ladies and gentlemen. Before we get to the good stuff, just a quick blurb to make the legal team happy. Just want to make sure everybody here, as well as with all of the webinars that we do, just want to make sure you're aware that we provide this service for educational purposes only. If you actually need investment advice, please seek out a registered investment advisor or another registered individual that can help you with that type of stuff. So everything that we have is for educational purposes only. All right, I think that's good enough. For the new folks that might be attending for the first time, just want to make sure that you're aware of the fact that not only do we have this wonderful technology that we've been building for the past 14 years, but we've also built quite the community around it. Kind of all starts off not just with these webinars, but we've got a live trading room that opens 30 minutes before every open, hosted by Mr. Barry Anderson. Been doing it for quite a while. People seem to like it because there's always about 4 or 5, it'll spike up to 600 people in there on some days. So obviously we're doing something right, and Barry's doing something right in there. So if you haven't been taking advantage of that resource, sign up. It's free. You don't even have to be a subscriber to get in there and see what it's all about. And of course, today's Monday with myself and Steve. The weekly webinars kick into gear tomorrow with Steve taking the helm for the Trade of the Week webinar. Andy Linloff rides shotgun with him. And then we change things up a little bit for Wednesday and bring in Dan, the CEO of the company, along with Brad, our friendly neighborhood CTO. Always interesting. Change of pace on Wednesdays. And then, of course, Andy rounds out the 1-hour webinars with the trading studio, and I ride shotgun with him. And then we change things up a bit for Friday. It's more or less a come one, come all. Just about anything trade ideas related, with the exception of Brokerage Plus. When that thing finally comes out of beta, we will probably start folding that in as well. But it's still in beta right now. Don't know exactly when. It will be released in the production, in the full production suite. All right, and one more little slide here just to let everybody, give everybody a nice visualization here. Is the AI resonating with our user base? And of course, picture speaks 1,000 words here. Up and away, and Scott, correct me if I'm wrong, but this is probably up a little bit higher. This slide probably hasn't been updated in a while. So the trend continues. Hollow continues to widen the gap between her performance and the S&P, and that's a good thing, and we keep improving her as we go along. All right, so of course, it's about that time, Steve. I'm going to pass the baton over to you. We're going to take a look at the major indices and the action, and let you do your thing here. So there you have it. Baton has been passed.
Okay, all right, hello, welcome to my desktop. This is where we typically kind of just talk about the bigger indexes, the bigger pictures, and my SPDR SPY S&P 500 ETF trend line is in perfect position here, going all the way back till that's January. Can you believe that? Touched it January, touched it here in April, again in May, again in July. And then this is where Steve got a little bearish because we broke the trend lines on heavy down volume in August, quickly to realize that was wrong and back up. Trend line held again here in September, held again here in September, late September, and that was like the last time we touched it back there. So it's been a while since the price action of the SPY has been anywhere near this very solid trend line. So point being is we may be a little bit ahead of ourselves. I, for one, would love to see a little shower, just a little market monkey bath, maybe 3%, 4% pullback. Let this stuff reset, reorganize, press change, rearrange, and the bulls would obviously want to see the price bounce off of this continuing trend line, upwards trend line. Going back to today and yesterday, for Friday, for what it's worth, a half day on Friday, got ourselves just a couple of little dancing dojis here. No winners, no losers. The market opens, makes some noise upside, makes some noise to the downside, and closes pretty much right back where it opened. So it's done that for the most part 2 days in a row. The Qs did that perfectly today. It was an absolute stalemate. No winners to the upside, no winners to the downside, and close it right back up where you open it. Starting to see a pattern here. Look at this. 1, 2 days in a row back here. Then some green and red color, and then back to the dojis. So, typically these doji candles mean that there was no winner today. It was nothing more than just a stalemate from bell to bell, and that's basically what we had in the Qs. The diamonds, not as happy as the S&P and Qs, and the reason I say that is because we did pop our head out here on the opening salvos this morning, this little move in the diamonds and the Dow, and then quickly got into uncharted territories, meaning a brand new all-time high. Price action didn't quite know what to do with itself. Sold right back into the range, and for the rest of the day, just basically went sideways. And then for our old friend, the crazy IWM, what's going on over there? Well, after a beautiful bounce off of what looked like death's door, kicked back into play, we got back above a 52-week high, and we traded there for 3 days. A lot of gap ups and selling in those red candles. And then again today, a little bit of a gap up, but this time we sold off and we did not close above that meaningful pivot line. So a bit of a caution flag there. I was very impressed with what the Russell 2000 IWM ETF did last week with that vicious bounce off of lows, but it's not holding. If it's going to come back and close back down here into no man's land, which by the way is this orange line to this orange line, was pretty much the no man's range that we had forever. If the price wants to continue to come back down to this range and just slog around for a while, well, then we don't really have much to go on there for the IWM. But for the moment, it looks like the S&P and the Qs really are, the Qs naturally, the NASDAQ really is the place to be. But we put in a stalemate day, a doji day today on relative volume of 1.04. Actually, all the ETFs were on perfectly normal volume, not really above, not really below, just kind of a day of going through the motions. So still no red flags to worry about in terms of what I'm seeing. The path of least resistance does remain up. However, as I mentioned earlier in the session here, this trend line is very much intact, and I would expect maybe at some point a test to come back to this trend line, and that's the level I would be watching if we do get a sell-off in the near term. But I'm not predicting one. The path of least resistance remains up, and that's continues to be what we are seeing. I will notice one thing on my sector board view here today. We had some of the semis and the oil and the energy stocks that were strong last week or weak today, but what was the strongest today? Well, it was the gold miners and the junior gold miners, and also natural gas. So if ever there was kind of a little, maybe kind of cock my head at a certain setup or a certain thing that popped into the play, well, today our gold miners did in fact turn out to be the strongest sector of all. And typically this can be a defensive sector. So not a whole lot of noise made today to raise too many flags, but it was interesting to note on just another day where the markets gapped up and didn't really do much. We had some nice strength in the defensive gold mining sector today. So I thought that was also worth noting. So with that, I will pass it back to you, Mr. Hodge.
Very good.
There you go.
Yeah, and it was like, today was kind of a tug of war going on from what I saw as well. Maybe everybody's just playing a little catch up from the holidays, and we'll get a little bit more action and direction tomorrow. But that's the way it seemed to me. Once again, if we take one more peek at these little, doji type candles, not a whole lot going on, a little tug of war here today, closing right in the middle, and at the worst possible down spot here, that wick butting up right on the bodies of those candles here. So the reason I'm pointing that out one more time is because I kind of had mixed signals today. It took me a little bit longer to figure out exactly what was going on. I guess we should start by talking about the expectations for the session. What were the compare count readings this morning? Well, let me pull those guys over here. And we can see, wow, after the first 15 minutes in the big caps, 62%, 63% selling bias in that first 15-minute period. Now, when we take a look at where the SPY was after the first 15 minutes, here I have my 5-minute intraday. So we got 5, 10, 15. When this big green bar here closed right at the top, that's when I took a peek here and saw, wow. And once again, just to refresh everyone's memory here, you know, usually we'll see some 55s, maybe some 57s, but typically when we see above 60, that's, you know, a lot more momentum than normal. Now, of course, because we're in a perpetual up market right now, when I saw these readings this morning, well, my natural instinct is just to go take a look and go, well, you know, we are edging down to this area here, but of course, the whole day, looking at all the indices here, volume was never really off the hook in a big way. So, you know, you have to always factor in the daily and where we might end up, right? But after we wick back up here, I get these readings, you know, 15 minutes in, and of course the market seemed to peel off after that, right? And that's typically, a lot of the times this will happen on these readings. Now the catch is this: at the same time, you know, Holly got active pretty quickly this morning. She got active before I even took my readings, and you can see that she was long in the first 12 to 13 minutes, 3 positions, and guess what? They were all working pretty well. So on one hand, I had extremely high readings here on, you know, were telling me, hey, we might have a little bit of downdraft. Of course we did. Now if I squish this up a little bit or go to a 15-minute, you know, what do we top out here? That was a right at 260.77, and we bottomed out right at 260. So this may look a little precarious here, but not even a point, 70-something cents. But it was a down move nonetheless. So one would think, okay, if we were immediately, you know, we're not just going to see those readings and see the wiki here and see the lower readings and just go, okay, I'm going to short everything blindly because the compare accounts told me so, right? We have to piece in other factors as well. Now, of course, if these readings had been that direction and that bias to the upside, since we are in an up market and we were popping above here, well, then that might have been a little bit different of a read, right? But the bottom line is this: I started pouring through my high volume downside ticker, you know, 30 minutes into the open, because I like to give a pattern. You may have to give some type of pattern time to develop so we can have a choice entry. But if I just kind of start scrolling through these guys, 30 minutes in, you can see a lot of the charts on the high volume stocks were exhibiting this, right? Now, sure, if you took a stab and got short up here for some reason, I don't know why anybody would. Maybe you're a 1-minute person. If you're comfortable with that, more power to you. But by the time I started looking, I'm just seeing these guys that have expended all this energy. I'm not seeing any nice little setups. They're giving me nice clean breaks. You know, if we continue to look through here, we're getting alerted to these guys pretty much at bottoms because it was just a little free-for-all. I think out of all of these guys, we're going to notice the same type of pattern, which was another reason I'm thinking to myself, well, the shorts just aren't adding up, and Holly is all long thus far, and she's doing not so bad, right? So a little bit of a cross signals this morning.
Yeah. So before we get too deep in that, I kind of wanted to touch on this earlier before we go ahead too far, and this is the first conversation you and I have actually had about this, Jamie. For those that don't realize, Jamie is an expert when it comes to cryptocurrency. All right, he was one of the guys that saw the forest through the trees and began mining Bitcoins with Dan at Trade Ideas years ago. Can't be done anymore, but very forward thinker. Kudos to Jamie. Has a zero basis in Bitcoins. Very cool. However, one of the things I wanted to note was, and I'm asking you, Jamie, I'm not saying this, I'm just wondering in your professional opinion, we all saw what Bitcoin did in the last week. Do you think that asset might be taking away some of the oomph from equities? Is that always a possibility? I'm just throwing that out there, everybody, because Bitcoin's on its way to 10,000, whether you like it or not. It's probably going to hit it in the next 24 hours. And allocations and assets have to be applied towards that. And you're starting to get more and more money managers into it. I was just kind of throwing that out there as a possible headwind when you see one asset do so well that isn't exactly equities. What's your thoughts on that?
Well, that's a very good question. Matter of fact, that topic has been swirling around in the ether, whether it's Twitter or some of the message boards or anything. But before I move on to that, just to clarify, no, my cost basis is not zero. And
you had energy costs, I know.
But hey, the mining, you just can't do that. The barriers to entry are too great. The equipment is too specialized now. But anyway. So yes, that is a valid concern. Of course, you're not going to hear the brokerage houses or the Fed or any of these economists. Maybe a few of the fringe economists are going to be talking about that. But as we know, at the end of December, the CME is launching their Bitcoin futures product. The CBOE is also going to be launching theirs as well, maybe shortly after. I think the CME is going to be the bigger contract. I think it's going to be 5 coins per contract. Yeah. Where the CBOE is just going to have singles, right? But once that happens, there's a certain, legitimacy is upon us, right? And so yes, there will be, a battle of to move money into the best performing asset classes. Now, I made the comment on Twitter the other day. How come nobody's came up with a study that shows how Bitcoin and the ability to move money is impacting or will impact the bank's bottom lines, right? Of course, hey, we've all got front row seats, so we'll figure that out, or we'll see as everything unfolds. But you're right, because there's not unlimited capital among the big players in the market. They constantly have to shift it around to where they think they're going to get the best returns. And just from a pragmatic standpoint, of course, you've got a newcomer on the block that is very controversial, but the hedge funds, that's one of the big speculations right now, is that in this last month of the year, there's a lot of Wall Street players that, hey, if you're going to be active in that environment, you got to have some inventory, right? The brokerage industry as a whole doesn't exist on futures products alone. You've got the underlying asset, right? But most of the people, they don't actually trade live pork bellies or live wheat contracts, and they don't ever take delivery, right? Could you imagine forgetting to close a couple of tons of wheat, and then all of a sudden, hey,
or gasoline. Where do you want all this gasoline?
Exactly.
So I didn't mean to get you too far off track there. I just wanted to pop in before I forgot about that topic.
No. Hey, I wasn't expecting to talk about Bitcoin today, but you threw it out there, and it is something that, whether you like it, hate it, it's here and it's here to stay, and it will have repercussions. But I will say this before I hang up the Bitcoin receiver. If you're not familiar with it, maybe you want to research it. But this is the big takeaway. What is blockchain technology? Blockchain technology ensures trust between two parties. It eliminates the ability for someone to commit fraud or cheat or lie or any of the stuff that goes on far too frequently in the financial sector. So, okay, let's move on to Holly now. And let's talk about, she did quite well today for a day where I was getting mixed signals, and we didn't have that big of a range and the volume was low. Boy, I even put a tweet out earlier today where, hey, while all of us humans are waiting for desirable patterns to form, Holly doesn't care. She's applying her statistical skill set and apparently doing quite well at it. So Holly today. 6 long strategies and 3 shorts. So she came to the party with 9 strategies here. And we can see we got a trade out of just about every one except for these 2 shorts down here. The putting on the brakes did squeeze out 1 trade for a winner on PPC. We'll take a look at it in just a second. But a total of 17 trades, only 1 short, so 16 longs, 1 short. And there was some good risk on opportunity in these 3 guys right here, UTSI, GLYC, and SWR. And of course, if I sort by risk on, you'll see all these guys pop up at the top. And let's talk about risk on, because it folds into the reason why Holly gets out of a trade, right? Holly obeying a rule set, stop loss, profit target, all that good stuff. That's Holly operating in risk off mode. And of course, if we take a look at both equity curves, risk off ended up winning the day. And we can see, you know, wasn't ever really in any pain on the trades that she took. No penetration below the 0 line, just a nice steady increase, a little peel back, and then a return to that previous high, $1.64 on 17 trades. Risk on at one point of the day, you know, we were up 2.5 or 2 and change here, pushing the 269 level. Same type of action, a retrace and a march back up to it. So, you know, at one point in the day, there was 2.6 on the table that could have been gleaned. Now, of course, to talk about risk on, let's just first clarify what is it. So let's just pull up UTSI here. What a nice little entry right here. Pretty much, what do we got here? 5, 10, 15, 21 minutes into the market. Holly calls the long right here, 388. And of course, for those of you who might be seeing this for the very first time, when I double click here, we've got all of Holly's important metrics sketched out and drawn on the chart for us. The stop loss down here, 370. Never even acted like it was gonna even head in that direction. So a nice little pain-free trade here. So what I really liked about this one, and still to this, I mean, it's still a beautiful little trade here, is the entry here. We knew coming into it, wake up call, which has been one of the better performing strategies over time. We already had 54.7% probability on our side. So let's say we take a little piece, maybe we take a piece if we're new, or maybe we just watch it. But as soon as Holly calls it, we get this nice little sideways action right here, which is known as a micro consolidation. What is that? Simply put, buyers and sellers are equal during this period. But guess what? Boom, we see some nice volume come into that guy right there. Now, I'm already in 100 with Holly. It's moving sideways, and I'm like, it's establishing a nice little range here, and that could be a prime little breakout here with low risk if I want to tack more size onto this position. So, you know, if we just play the little game where we can put a few horizontal lines in here to give us a reference point. Puts in its high, low's already been put in. It goes to sleep right after Holly, let's see here, right after Holly calls it. So we're moving sideways, and then boom, we crack right out of that range. We can see the accompanying volume. This would have been a great one to add to the position since we get this nice tight little pattern after Holly calls it. And then of course, off to the races. And you know, when we get into a position like this and we're up here, who comes to calling, Steve? We got one on the right shoulder, we got one on the left shoulder. The greed and the fear demon, you know, once we get up nicely, we're like, well,
emotions.
What are the expectations here? I'd hate to get out here for my whole position and only to see it take a little pullback, which is completely healthy, and then march, just close it, you know, close at the upper extreme here. Yeah. But to help me maintain my expectations, let's look at our good friend, the daily. And what we want to do is make sure we're seeing the whole picture. I think I am here. And then, as we're in it with Holly down here, and it moves on up, and we crack this wick right here, wow. Now we're also breaking out on the daily with the added benefit of volume behind us. So see, once we're in it with Holly, maybe we add some here, or maybe we're consulting the daily and getting ourselves ready. Okay, here's our entry. If we get past here, we could be moving all the way up to here, and if we crack through here, boy, we could really keep going, and that's exactly what happened. right? So some simple techniques to help us manage our expectations once we get into a trade. And of course, this technique is valid, viable, whether it's a Holly trade or not. So the bottom line is this: Holly takes a whopping 47 cents. Why does she get out? Timed exit. Well, we know, wake up call, timed exit, geared around a 60-minute hold time. So she stayed in it for the duration and plugs out right here where the shaded area ends. Now, of course, we think there's a little bit more meat on the bone because we're seeing what's unfolding over here as well. And I still think to this very day, whether it's a Holly trade or anybody else's trade, if this is a range break, let's pretend that Holly hadn't even called this. Let's just pretend that we saw this and we hit it. Well, to feed that greed and that demon, or the greed and the fear demon, you got to feed them. They'll leave you alone. Would have been a great idea to peel out a half your position here. You make money regardless because you take your other half if you want to stay in and you set your break-even stop loss. Worst case scenario, the second lot folds over and gets you out for a flat or lose a few pennies, but you made money on the first lot. You will never go broke doing that. But in this case, you would not have been stopped out on your second lot and you would have enjoyed a bit more alpha, right? You would have captured something between 47 cents and $1.03. So we got 56 cents in there on the table, and whether you get 10 cents of it, 20 cents of it, on a trade basis added up over time, that can make a huge difference in your net bottom line. All right, let's take a look at the next one, GLYC here. Entry from Holly comes here, and then we get a little gyration, but then boom, another nice pain-free move to the upside. Why does Holly get out? Well, she got a little nervous on this one. The longer she stays in a trade, if it isn't continuing to go up, and we get a little sideways action right here, a little wiki action, she does have the ability or the option to exit prematurely in order to try and protect that profit. Now, sometimes she protects it, sometimes she leaves a little bit on the table, and this is another classic example. Once we're up here and we see Holly exiting, simple protocol. Okay, all right, Holly, I'm going to take half off with you. I'm going to set the other half for a break-even stop. Once again, never would have stopped you out, and you would have enjoyed a little bit more alpha. So in this one, another 56-cent spread in there. And, you know, once we got into this little area right here, it wasn't a very stressful trade. You know, you weren't sitting on pins and needles. You were just like, okay, it's either going to stop me out or I'm going to get a little bit more here. So this is a way to extract some of what you see between risk off and risk on, and at the same time get comfortable with Holly exiting half on risk off, keeping the other half for a break even if you're wrong, and if you're not, you get to participate in some of this spread here. And of course, probably, you know, the most obvious one here, reduce risk, Holly bails out for a 5-cent profit. And of course, right here is where you can see Holly staying in the trade risk off. Now, you know, from a human's perspective, we're seeing this little back and forth between the entry line. Sometimes they do this, whoosh, right up, just like these guys. Sometimes they'll come back and forth through that entry line several times. And the important thing to point out is the statistical probability that Holly gives us, in this case, sunrise mover, coming in at 66.7%. It's good for the day. The the statistical probability is good for the day. So we buy it here, yay, we're in the money, we're down. Okay, now we're back up. Bottom line is, always pay attention to the hard stop. You're gonna see Holly getting out sometimes, but that's just because we have to give her that ability, you know, simply because we can't let her, you know, take nice winners and let them turn into losers. So Holly's strong suit are her statistically charged entries. She's not the best at exits. I'll say that right off the bat, but that's okay. That's not the way we designed it, all right? Man working with machine and doing a little chart reading here and doing a little bit of both a risk off and risk on, in my opinion, is the most proficient way to get used to this methodology. And of course, 5 cents versus 88. I mean, there's 83 cents left on the table here. Holly gets out right here. We're thinking, you know, it tried to stop us out. It's hugging the line again. Get out of half with Holly. Boom, enjoy the rest. So those are the three pretty good examples of going risk on with Holly and being able to pluck a little bit of that spread that we have going here. All right, just checking the questions panel here. Looks like not too many questions, and Steve's doing a good job at keeping them answered here. All right, so let's move on to the trade around, and this one's kind of a hybrid today. It wasn't necessarily a stop out in the TIVA, but she was up, then she was down. So let's find the TIVA trade here. Turned out to be a decent winner. So TIVA, here's the trade. Holly making the call right here. Now we can see here the hard stop was never triggered, but time was passing and getting wiki candles. Holly's like, well, this thing's not working. Might as well go ahead and cut it and take my nickel. And that's what she did here. Of course, we can see these wicks. You know, these are good signs because sellers try to take control. They whip it down real quick, but they can't. The majority of the volume's done in these little bodies up here. So that's always a good sign. So we see, you know, this nice wiki action come back through, pops again. You know, if I'm in this trade and the hard stop hasn't been encroached on, I know that time is on my side here with the statistical probability. We're ebbing and flowing through the line multiple times, and then of course, eventually it catches. And whether we got out a half here or whether we got out a half with Holly for the nickel, if you got out a half for a nickel and then set the other stop loss once we got through this area right here at a break even, boy, it would have come close. Would have come close, but even this one, you would have stayed in and could have enjoyed additional alpha to the tune of, you know, 83 more cents on the table. So pretty stress-free trades in those three right there, or those four. The risk-ons, and then the one example of a good trade around. And just get in the habit. Anytime you see Holly in a trade where she's upside down, and sometimes they've even been stopped out. But all we do, you know, for example, if we would have set this alert the second time, you know, Holly calls it here, and she gets out. Well, the good thing about these guys is if we set the price alert and it never gets back up there, you never even see it. No. But a lot of the times they'll come down here, do that little horseshoe pattern, come back up, and then go. So it's always a good idea to just get in the habit, right? Get in the habit of doing that, and eventually, over time, this methodology becomes second nature, and then the whole process becomes a lot more simple. And that is pretty much about it for Holly today, with one exception here, max profit column. So the thing to point out here, ladies and gentlemen, out of 17 trades, there were only a couple of trades where you were never in the money, right? And of course, you're only in the money 2 cents and 4 cents respectively here. But when you spit out 17 trades and you're in the money on all of them except 2, those are very strong statistics. And then once we get past the lower ones here, you know, 8 cents, 10 cents, 14. So this is the power of the statistical model, right? How many times are you in a trade and you're never in the money? I had a training session with a guy today who's relatively new. He's like, you know, I'm never getting in the money. Things seem to move against me immediately. And hey, I know all about that. I've been through that. Steve's been through that. Andy, we've all been through all of these trials and tribulations. And man, if you're making entries and you're never in the money, that's not good for the mentality. So being in the money is the first part of the equation. We want a good entry. It's going to be based on timing and statistical probability, or maybe some of our other high quality windows. But we want to be in the money as soon as possible so we can gravitate to the second part of the equation, which is managing our exit. Steve, anything to add about
yeah, you know what, real quick, just click on that one short for the day. My ad is the directional bias was Holly was long today. Mm-hmm. But here is an interesting scenario that if we start to see more of these, this could also start to signal possible shifts in the wind, where the buy the dip when you flip it upside down, becomes sell the rip. And I
Yep.
love when I see Holly taking entries short, just like this, not pounding the bid, not trying to break yesterday's low. But there will come a time, guys, I don't know if it's going to be 1 week, 1 month, or 1 year, when the market goes back into sell mode and buying the dips doesn't work. You basically get run over. And so hopefully Holly will start to show us some good ideas and some good repetition entries that look a lot like this when you start to get to selling into strength. I don't think we're there yet. Holly would probably agree. There was only one attempt today to do that. But keep an eye out in the future on the AI. If you start to see more of the putting on the brakes or selling into resistance, those types of trades, and maybe 3 or 4 or 5 attempts in a given day, you know, that could be an interesting tell as to what's going on underneath the seams in the market.
Yeah, and Holly did pluck 23 cents out of that one. Had she stayed in it, there would have only been 5 cents at the close. But interesting value here. During this time here, up 34 cents, right? And that's what you really can't see when just looking at these columns here. There was a chance to pluck 34 cents out of there. Same old methodology. Play the risk on, risk off game. Hey, I've got this nice down move here. Okay, well, what's going on here? Well, as we were bottoming out right here, or actually right here would be the bottom of the candle, but we can see, it's just kind of button up here. Unless we've just got mammoth volume all of a sudden compounding that stock out, then might not be a bad idea to take half off right here, give the other half a break even, had plenty of time to get out for additional profit. If you try to stay in the whole day, you did get flushed out of that second lot, but it's still a winning trade because you made money on the first lot. So, you know, considering the mixed signals that we had in the first 15 minutes or so, and the market kind of correcting, or not correcting. I mean, Steve, you used the evil C word earlier when you were talking about, eventually I wouldn't be surprised to see a correction down to this trend line. I'm like, oh, you can't say correction.
I think I called it
that's blasphemy.
I think I called it a monkey bath, didn't I?
Yes.
It's like a minor shower.
Obviously, I'm being a little sarcastic.
I hear what you're saying. People don't want to hear that, but it's due. But we'll wait.
Right. So, in getting back to my favorite long short tickers not producing anything, giving me signals at the end of these little rundowns with no discernible pattern. The only one out of probably 40 stocks that I looked at this morning, the only one that even presented a halfway decent short opportunity that I saw was this little guy today, CNI. And of course, it was much later in the day, about an hour and 15 in. But most of them had already capitulated down at the bottom and were just going sideways. There was no room left in them. So, it may have looked like it was a big short day, but there really wasn't a lot out there if you were following the volume, right? So, talking about high volume, Holly was doing well long. So also that told me, well, the turbo family up, even when the market's going down, still spits out some really high quality plays, as long as you're, minding your P's and Q's about the volume and the quality of the pattern. So, as always, with these high volume tickers, you'll hear Andy talk about his high volume ticker. It's just a little bit different than what I have going on here, but we're always using the smaller time frames, the 1, the 5, the 10-minute, to confirm that the volume is indeed high on those levels. And then you couple that with high relative volume ratings and a pattern, and then, hey, you got all the ingredients that you need for a decent trade. So out of this guy today, which, by the way, we're adding on the additional factor of no resistance, which means when you look at these guys, they're going to be at all-time highs, so there's not going to be anything for them to bump their heads into. So there were some really good signals from this window today on HI today. So here is the HI 5-minute candle chart. Now, as soon as I saw HI come across here today at this time, well, I'm like, okay, here's high again. What do I mean by again? Well, look at what high's been doing over the past Today, 1, 2, 3, 4, 5, 6, over the past 7 trading days as it broke out of this channel here, it's just been on fire. So because I've seen this stock coming through for the past week, when I see it this time, I'm like, okay, here it comes again. What's the pattern look like? Is it nice? Is it clean? Can I identify that, yes, this is indeed a range break? And if I look back 15 minutes, not including this entry bar here, 5, 10, 15, and I can stomach a loss if I'm wrong down to here. It's a good clean trade. It's punching high volume. At the time, relative volume was off the hook, 5 minute, 1 minute, all the things we like to see here. And of course, produced a nice little pain-free trade here where we never even got our stop loss flirted with. The added benefit, looking over here, nothing for it to bump its head into. It's never a guarantee it's going to just go up perpetually. But it's a really good attribute to have in a long trade where you've got a nice clean entry on the intraday. This little guy also came through, this ticker, RGA. And of course, we got follow through here. And then just a nice little sideways wormy action, but plenty of time to peel out at these levels here. Never really risked losing anything here. This was an extremely low risk trade. 15-minute right outside of these wicks here. And of course, what I also want to throw in here is a lot of people seem to think that when they're watching a ticker of this nature, well, okay, it's going to pull up these guys. Well, no, because if you weren't in the chair at the right time, you're going to get the new high when it's pushing through here. It's already too late. Pattern's already been penetrated. The nice entry, which hopefully you could have gotten the bottom of that bar right there, it's already gone. So this is all about timing, all right? A stock exhibiting these characteristics and then we fold in the pattern as well. We're not doing it backwards, which is the way a lot of people do it, because this pattern is all over the market every day. Multitudes of these patterns. But guess what? You try to play this pattern where the volume is just normal, slightly above average or slightly below average, you have a lot, the odds are not anywhere near as good as if the volume is pumping and you're finding this volume and you're finding this pattern as well. So keep that in mind. So we had high, we had RGA, and then of course we had things like this too, where the pattern was real clean. Once again, we had high volume, extremely high volume during this time, and we get a nice move. But guess what? If we didn't play a little risk management, okay, this guy is also busting out into blue sky. I can also tell that this issue isn't that old. These are the only days that it's traded, right? So we get a nice little move to the tops. We're thinking, hey, off to the races here. But just because we got this going on does not mean they can't retrace. So once again, just depending on, you know, how you went into this thing, could have easily taken a little bit off the top here. You would have gotten stopped out on your second lot, but that's okay. The ones that do keep going, we'll capitalize on them. There were already a couple that kept going. This one you just made a little bit on. So what? Half the battle is getting in the money. Then you have a profit to manage. You can't manage profits if they're never there.
You're doing a good job at creating value on that particular scan, because you do have some people asking for if you can get a copy of the Turbo Family.
And I will be happy to drop that in here into the chat so you guys can have it. And then, of course, the nice thing about this guy is you're not getting too many hits, all right? So it's also a good, you know, as I like to say, we're doing it the opposite way. We create windows where we know the volume is there. Then all we have to do is play the matching game. Is this my pattern? No. You know what? 80% of the time, the timing is no good. So we're operating more or less just like a pro poker player. And I'm not talking about the guys on TV, Phil Hellmuth and all the tournament boys, right? I'm talking about the guys that go every day like it's a 9-to-5 job and sit and play for cash. That's a whole different game. Those guys are folding 80% of the time, and pretty much you should be doing the same thing. right? Because I'm showing you these nice tight patterns that really resonated with me, but how many symbols do you think I had to go through to find those patterns? But that's what we do. Welcome to trading, right? I'd much rather have a looser, high quality stream where I know the volume is there than try to paint myself into a corner and get too specific and want each and every tick to be, the golden egg, which we all know that's a fantasy. So these are very simple techniques, but they're very powerful, right? Great for new people, great for people who have been in the chair for forever. It just doesn't matter. But the bottom line is we don't have to worry about the volume. Now, of course, I'm not sitting here going, the only thing that works are high volume, because we see stocks go up all the time on average volume. We see stocks go down all the time on average volume. But if you want the best odds in the long run, you always want to go to where the flow is. So we've got price, action, and volume, and we fold in Holly with her statistical precision. And if you just focus on those three things alone, man, it's very eye-opening. And your confusion level goes down immensely.
Mm-hmm.
Now, I'd be remiss if I didn't talk about this guy real quick. There aren't a lot of things coming through here yet, but you'd be surprised at some of the things that do come through here. And then we just invert the pattern. Now, I've left some shorts on my price alerts window from the 13th and the 14th. These are all short entries using the same technique, using this window where instead of no resistance, these guys are going to be at all-time lows with no support. So you can see all of these guys were created on the 14th and the 13th, and they either executed shortly thereafter, but they haven't recuperated. The only one that's out of the money is LAUR. We can see, it began its descent into the abyss as it broke these levels here. And there was some good profit opportunity in there when you got the clean range break on the intraday. I think that's, yeah. And then we got a nice little down movement here. But the bottom line is that this is the only one that's really snapped back. A lot of these guys, once they make that plunge, once again, seeing more and more of these new issues that are just going down and going down hard, right? Like, wow, how many of these am I going to see? A lot of these are those Reg A offerings that were the little darlings like Blue Apron, but guess what? Turned out not to be so darling after all. So no recuperation, and even bounces off the bottom, which tells us we were up a lot more than 3.5 at one point in time. Of course, then you're going to see just the troubled stocks that have been around for eons. What is this, the third time that Sears is going to claim bankruptcy, right? Mm-hmm. So, not something that I would just sit and watch every day. It's almost going to be like watching dry ships looking for a good trade, which, by the way, dry ships is tradable sometimes, but not most of the time.
Generally
so,
not.
Shield, really no big interest to me. Now, if it starts breaking down here and it's easy and I can borrow it, assuming they even have it now, since it's under $4, maybe not. But then you'll get things like this, WOW, which came through, which is still up pretty nice, and he just looks like he's setting up for more downside agony. So these are also things that you can continue to watch, and you already know they're in trouble. You see a nice little range break setting up on the intraday one day, and the volume's big, and you're like, why not? Why not take a piece of that? So, as we see more and more things come through this window, then that's going to also keep us in tune. Okay, well, if the market's like an equation, and you can set up a bunch of different ones, like, okay, stocks at all-time highs versus stocks at all-time lows, there's a certain ratio there. Well, as we start to see that equation become balanced, when's that going to happen? Don't know. But you know what? We're going to feel it coming through this window as it starts to kind of make that transition. The equation will start to become balanced, and because we have these windows that are showing us these things, we'll be a little bit more in tune. than the average bear out there. All right, so I guess it's time that I should go ahead and
drop those in the chat. I'll help him walk him through it. You guys, what he's doing is he's copying the cloud code for those requested scanners. And if you will go to the GoToWebinar floating toolbar, where you ask questions, and there's a chat window. You just got to expand that chat window, and inside there, Jamie's going to be dropping the cloud codes for those particular scans that were requested.
Yeah, and on the downside version, I'm setting a minimum price of 6 because you don't want to see a bunch of 50-cent and things that might not even be borrowable as short candidates. So a minimum of $6 on this guy here. And of course, you're always welcome. You're going to have these in your cloud, so you can't delete them unless you just do it on purpose. But you can always come in here and, I wouldn't go modifying the base filters, but if you want to modify price or things of that nature, by all means, experiment. It's a good thing. No support. Okay. All right. So both of those guys are now in the chat area. Looks like we're right about the top of the hour. So Steve, anything to add before we bring Scott in and let everybody know how they can take advantage of Cyber Monday?
No, just a Bitcoin prediction. I think it's going to hit 10,000 and pull back to 7,000. And I think you and I both kind of agreed on that.
I was like, hey, it might hit 10,000 pretty soon here. Of course, if you look at some of the market centers that we watch, it looks like there's just ginormous sellers. It just seems to
be the way that thing trades. Hit a really big century mark and then pull back really super hard. But we're not here to talk about Bitcoin. I just had to throw that out.
Right. Well, I mean, hey, people are talking.
It's trading. It's still trading.
Permeating everything, and we will have cyber currencies. I'm being told by the end of the first quarter next year, because it's a 24-hour market. It never closes, and there's no pattern day trading rules. And the moves are
it's fun to watch. It's in its early infancy.
Yeah. So it's exciting. And the good news is we're going to make those metrics available to our clients. So just imagine in the future all the filters, all the alerts, but you'll be able to use all those to track cyber currencies, cryptocurrencies. Okay. All right, Scott, if you're there, we're ready for you. Scott.
Yeah.
There he is.
Oh, yeah. Once my GoToWebinar interface came back up, I could hit the button. Thank you.
No problem.
Couple things to remind you guys on the way out. If you're an interactive brokerage client, do check out the Brokerage Plus module. Right now it's only available for interactive brokerage, but if you do have an IB account, you can connect it. It's been available in Trade Ideas Pro since our beta 4.0.136, so it's now in the regular download as well. So whether you're using the regular or the beta, you can beta test the Brokerage Plus if you're an IB client. It's free for now. If you're using premium, you can just connect your stuff and automate your trading. So if you have any questions about it, email info@trade-ideas.com for help getting that going. We're still looking for feedback on that before we make it a payable product. Do make sure you're subscribed to the Trade Ideas podcast every Friday. We skipped last week because of the holiday, but there'll be a fresh one in the can this Friday, and it comes out Friday afternoons. Just search for Trade Ideas podcast in whatever application you use to listen to podcasts in. So it's just added to your subscription. You can save big today, 22% off your first month or year premium or standard by using the code CYBER2017 before midnight tonight. It's Cyber Monday. Get in on this deal. If you're not able to, we still have another code that's good for the rest of November, which doesn't have too many days left either. And it's Holly Snap, all caps, just like the Cyber 2017 code, and that gets 15% off the same first month or year of Trade Ideas. You can download the PDF with these cards by expanding the handouts panel on your GoToWebinar interface and clicking on the blue download link right there. Email us info@trade-ideas.com with your questions. Make sure you're following Steve Gomez at Today Trader on Twitter. Jamie Hodge is at QuantBot. Our CEO is at TradeIdeas1. And again, the best email for help is info@trade-ideas.com, although you can reach out to Steve or Jamie directly if you want to. Thanks, everyone. We'll have the recording up later on tonight. Thanks, Steve and Jamie.
All right. Thank you. I'll see you tomorrow.
Thanks a bunch. We'll see you on the flip side. Bye-bye.